Welcome back to the morning show here on Arise News. Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abasi. Good morning, Ayo. Good morning, Vimbai. And all our viewers out there. The YouTube is on fire right now. Have you guys seen the YouTube? Shout out to our YouTube viewers. Let's start with, of course, oil. I almost said oil and gas. But oil prices. Range bound in the higher 70s, right? Look at Brent crude now, just quietly inching its way up to $80 a barrel. You see West Texas Intermediate 74.33. So you see Nigeria's 2025 benchmark. This is where you need to be, but you need it to be much higher. You need the Brent crude to be way above your benchmark so that you can have extra money to go into your excess crude account. Natural gas, of course, climbing as well. The weather around much of the northern hemisphere is getting very, very cold. Asia markets all bearish on this Friday because of a lot of data in the Asia markets coming out of Japan and China. Shanghai Composite Index, we got a report that the PBO, anyway, I'll get to that. PBOC is saying they might suspend treasury bonds in the interim. So 1% drop there. Kospi finally down after being up for much of the week, defying my expectations or forecast. Hang Seng in Hong Kong down as well. Nikkei 225 leading the way. So we get to Japan. Household spending in real terms actually falling. It's been a bit of a trend these last few months. For November, this is real household spending annualized 0.4% for November. The forecast was 0.6. So it was actually a bigger drop in October. Again, you know what's been going on in Japan. People have been asking for wages to go up because inflation has been climbing. So you've got households being a bit careful, cautious when it comes to spending. What's the average real income? I think it's about $3,500 for a household for two or more in Japan. All right, that's in dollars. All right, from there we go to the People's Bank of China. Reuters reporting that they intend to suspend treasury bond purchases for now. According to the PBOC, with what Reuters was saying, they said that the bonds are in short supply and they would resume depending on market dynamics. I think basically they're seeing a reduction in demand for these bonds because of some of the headwinds that China is facing. I mean, it could be that's just my own guess, or it could be a change in strategy in terms of the amount of debts that China wants to take on, because a bond, of course, is an IOU. To the United States, you were talking about the wildfires, and a lot of interesting data that's been coming out. This region, the Los Angeles County region, I think Palisades and other areas, insurers are declining residents there. They are basically saying that we are not going to insure this area because it is high risk. Now, the state of California has its own insurance program. Governor Gavin Newsom has mentioned it. I think it's called FAIR or something, where they want to act as a backstop to support some of these areas that are insured. You played that clip of President Biden saying that the federal government will try and assist to 100% much of the damage. But that is not going to trickle down to the average individual who lives in the Los Angeles County area, because their premiums are going up. So by and large, regardless of whether the California government steps in or pretty much what's going to happen is that premiums are going to go up for this particular area, simply because these wildfires are something that normally happen from late spring until fall. So that's about April up until about August. But here we are in January. So this is again another climate change discussion with respect to something that is not an anomaly, but happening in a different time of the year than it is supposed to. Let's get to Nigeria. The Bureau of Statistics, National Bureau of Statistics, had a workshop yesterday where they were basically trying to sensitize Nigerians to GDP rebasing, which is of course going to be taking place this year. They're going to rebase let's see now, GDP to base year of 2019. And for CPI, that's the Consumer Price Index, that's inflation, they're going to rebase that to 2024, and that's raised a couple questions. We have a couple guests. Professor Waleke, who is a professor of capital markets. You've had him on this show. He's going to be on the Global Business Report later on today, where we're going to be discussing this. Let me take you back to 2022. This is July 2022. We had Bismarck Rewane, renowned economist, CEO of Financial Derivatives Company Limited, talking about inflation. And just for the sake of the numbers, let me just quickly throw this out before we play the clip. Now, we're in July. And we're looking at June inflation. Headline inflation for June was 18%, 18.1. Food inflation was 20%. That's year on year. On a month on month, I think it was about 1.8 for headline inflation, and food was 2%. Listen to Bismarck Arwane talking about the need to, revitalize the baskets, basically.
There are two things here. One, there's a question of data integrity, which Nigeria has not been known to be a unique example of integrity, not only in data, but in every other thing. So
yes.
We have our reputation, which lives ahead of us in so many respects. So that's one. Two is the fact that the inflation basket is supposed to be reconstituted every 5 years. Naturally, your behavioral patterns, your demography, in fact, your life expectancy and all of that.
Yeah.
So the last time changes over time. Therefore, you need to reflect that in terms of changing your consumer basket.
Okay.
Even if it's just tweaking it a little bit. But the last time we did that was 2009. So quite frankly, going by the 5-year cycle, we are due for a third review, but we haven't done anything about it.
So there's another part of the clip that we'll play in our interview, but FDC, Financial Derivatives Company Limited, did their own rejigging of the basket. Now, by the way, as you said, every 5 years. So it should have been done in 2014, then in 2019, and then this year that just ended in 2024. So we should have had 3 already. This is a question, and shout out to one of our technical crew, William. He's always challenging me on this. He says, how is it that rice prices or prices of Gary, and even in our YouTube comment section, they are prices in percentage terms are going up by triple digits, yet you've got headline inflation at in double digits, right? And I think we have an inflation table where you've got the allocations to the basket. So you got food and non-alcoholic beverages making up 17.5%. This is your year on year. You've got housing, water, electricity, and gas and other fuels at 5.6. Now, when FDC reconfigured the basket, they came out, this was, remember, this was 2022 when inflation was at 18% headline. They came out with 45% using the MBS's own table that you're seeing here. And then it came out with like 84% when they did their own synthetic basket. That is 84% year-on-year inflation. So much of the conversation is going to go around, will you rejig the basket? Look at how fuel subsidies impacted food. That is a pass-through effect. Foreign exchange as well, that pass-through effect. So a lot of that is going to be discussed as we discuss inflation going forward. But before I let this inflation matter go, you did have Tilewa Adebajo on the show, CFG Advisory, right? Remember when he said that it is not the business of the government's fiscal side to be projecting inflation at 15% in 2025. Yeah, just a reminder, I really enjoyed that extra. I've got to remind everyone to play it.
Inflation to rest once and for all. The only body in Nigeria that is responsible for determining inflation and interest rates is the Monetary Policy Committee of the Central Bank of Nigeria. And that is why you see that separation. So while the presidency might desire, and we also do, we desire low inflation, because with low inflation, we can grow the economy. We all do, that's a laudable target. But at the end of the day, it is when the Monetary Policy Committee meets in their next meeting that we will get an idea of what their inflation targeting is. The monetary policy said they were going to target inflation to 24% this year, but because of challenges within the economy, they couldn't get that done. So let's wait for the next MPC meeting and let us understand where the direction is going.
All right, and that is our update for today.
Thank you so much for playing that clip, because this is a very important conversation, right? And it continues to baffle me, but it is what it is. Because ultimately, we know that the central bank is responsible for the preservation of the currency, inflation.
Price stability.
Price stability. Yep. So, when you now see the fiscal coming with these projections and you ask yourself, okay, where's the marriage between I love that I think later in the interview he said those are desires, they're not projections.
Right.
In essence, because it's just when the MPC meets that we'll know what, but we've already had a good idea of, I believe last year the inflation target was 24%, right? So we wait to hear what the targeting is for 2025 from them. But with regards to rebasing, and this aspiration to get to 15%, I think we have to be very careful with that, because this thing also has unintended consequences. See, in Zimbabwe, when we felt like our currency had depreciated to the end of the earth and there was no way to resuscitate it, we woke up and we said, okay, let's start again.
Right.
And that second currency also went
When
through
the
the same
same
process,
thing.
and the third, and the fourth, and we're
The
now, I
zig is the
believe, on
latest
the,
one.
we're
I
on
love
the,
that, the
on the
zig.
fifth or sixth currency.
Yeah.
I stand to be corrected. But all I'm trying to say is that if you do not resolve the fundamental issues, it's all still going to end up. We'll still end up at the same 30, 40%, whatever it is.
Yeah.
Even if you wake up on the 1st of January, on the 1st of February, and President Tinubu makes a presidential executive order to say inflation in Nigeria is now 0.5%.
Right.
The truth is that people will still go to the market, things will still cost what they cost, and those realities will still be unearthed. So I think let's just focus on the fundamental issues.
I agree.
My takeaway. Sorry, then very quickly on the fires. So this happens a lot in Cape Town as well.
The wildfires.
Cape Town and LA,
Yeah.
you know, they have a similar topography. And it's interesting to see how they deal with it in Cape Town versus in LA. What got my attention with LA is that they've now brought in prisoners to fight the fires as well, being paid 14 cents per hour. And I know Chris Brown made a statement saying, well, I hope you guys are going to do a parade for these prisoners, because some see it as slavery.
Right.
So just
slave labor.
Yeah. Slave labor.
I have some breaking news before we proceed. Yes. Or just, all right, okay, so, okay, we'll take that afterwards. But we have some updates from this conversation we had earlier this morning. But yeah, absolutely correct. So let me start with the fires. When we're talking about the costs to insurance companies, we're putting at $8 billion or over $8 billion. The conversation, what my thought process was that usually when you get a premium, you have the fine details. And usually it doesn't cover natural disasters, force of nature. And I wonder to what extent the insurance companies would be able to get out of it, because this is said to be the costliest disaster in American history. And so what you're saying is absolutely correct. And even in the event that premium is paid, what would then happen for the value of property in that area, especially because it's been identified as a high-risk area? Premiums will go up. Then the conversation around the fact that even before, insurance companies were unwilling to insure homes in these areas because of the risks of fire disasters like this. So what some people opted for was the state-run insurance provisions, which does not cover things like fire. So it seems like, despite how optimistic, I had said, a great thing about insurance, which we always talk about, is that a number of people will be able to recover, but it doesn't look very much like that. Some people might be able to recover, but a number of people, might not be able to recover.
Okay, let me start with Japan. Japan real household spending came at 0.4%, and that had effect in the Asian stock markets. So the Asian stock markets, fell flat, more or less, as a result of that. The KOSPI and the Nasdaq went down. The China CSI 300, which is the mainland China index, fell marginally below the flat line. The topics and also the Japan Nikkei 225 also fell by 0.71%, 0.54%, respectively. Now, that's what happened in Asia. But in Japan, the main issue is whether they will hike rates or not, and whether wages will go up and all of that. But we know that in January. In the US, the markets were closed yesterday on Thursday as part of the tribute to President Jimmy Carter. So there wasn't much activity. But what we know is that between Wednesday and also this morning, there's been some rebound in the stock market on Wall Street, with the S&P 500, coming back to life slightly. But the big issue in the United States today is the December job report, which is to be released today, the non-farm payrolls. Now, economists are projecting that to come in at 155,000. Now, this is an improvement. This will be a reduction from the November figures that we had, which was 227,000. If unemployment rate will remain at 4.2%. Now, that's expected in terms of the fact that, look, in the December reading by the Federal Reserve, we were told that the job market is still very robust. However, the analysis is mixed. Goldman Sachs is saying we should not expect more than 125,000 in terms of the figures. But we will know when that particular report is given today. Friday, December jobs report from the United States. All of this leading to the January 2029 meeting of the Federal Reserve. Finally, TikTok, the Supreme Court is set to listen to arguments from TikTok, whether or not the foreign adversary, applications law is a breach of free speech. Now, we don't know what the Supreme Court is going to decide, but if the Supreme Court decides that that ban should stay, well, it means that by January 19, TikTok will have to be sold. Already, Liberty, one of the U.S. interests, is already saying they are making a bid to buy TikTok from ByteDance. Now, if by January 19, the Supreme Court has not taken a decision, it means those who are already on the app can use the app, but thereafter, they cannot upgrade, they cannot re-download the app. So this issue between China and the United States, between Tencent and US, Huawei and the Department of Commerce, the entities list and all of that, we're likely to see an escalation under Trump. Although Trump is saying he should be allowed to have a political resolution to the TikTok matter, and that the Supreme Court should hold on and not take a decision. The outcome is not clear yet.
Drama everywhere, Dr. Abbasi.
Nigeria is opening its arms wide to China, even though the US is. Well, thank you so much, Rotus.
Thank you.
We bring you an update from General Hydrocarbons Limited now, as the company has released a statement over the case with First Bank. It reads, "We are General Hydrocarbons Limited, owners and operators of OML 120 deep offshore Nigeria. Having been inundated with calls and concerns over claims and counterclaims in our oil and gas drilling campaign on OML 120 deep offshore Nigeria, we hereby state as follows. At the request of First Bank of Nigeria Limited, FBN, we reached a subrogation agreement following the bank's non-performing loans, which has become a systemic risk for FBN to finance the exploration, development, and operations of OML 120, and we both share profits. First Bank share being used to liquidate its non-performing loans. Following the subrogation agreement, we gave them comfort in a tripartite agreement resulting in FBN's return to profitability and growth. Since then, FBN has breached its obligations under the subrogation agreement and tripartite agreement, resulting in the current challenges. We are in court and arbitration to resolve our differences and have obtained a court order securing our operations pending determination. We hope for a favorable outcome under our system of justice. Unfortunately, First Bank continues to disregard and disobey a subsisting court judgment in favor of GHL and instead has chosen to mislead the public. Our lawyers are addressing this flagrant breach in the right forum. There is no cause for alarm. As a going concern and as the one and only wholly owned Nigeria company in deep offshore Nigeria, 75 kilometers at sea and over 850 to 1,000 meters water deep, our oil and gas campaign has discovered oil and gas to the glory of Nigeria, thanks to the ingenuity of our Nigerian-born engineers and technical partners, including Messrs. Schlumberger, Baker Hughes, Century Group, and so on. With its strong asset base, GHL is in good standing to meet any obligation that may fall due. We call on our valued partners to remain calm as we work through the courts, arbitration, or mediation to seek solutions to our differences in strategy, not in form or substance. We willingly rescued First Bank of Nigeria Limited from the abyss and are not about to throw away the baby and the bathwater. Through our collaboration, we have resolved FBN financial challenges and discovered crude oil for the Federal Republic of Nigeria. We continue to believe that justice and reason will prevail sooner or later. End of statement.